Ladies and gentlemen, good day and welcome to the Craftsman Automation Limited investor call to discuss the financial performance of the company for the quarter and 9 months ended 31st December 2021. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Srinivasan Ravi, Chairman and Managing Director from Craftsman Automation. Thank you, and over to you, Mr. Ravi.
Good morning, everybody. It gives me immense pleasure in welcoming you all for the earnings call for the quarter 9 months ended December 21, for the FY22. We all know the challenging environment, both on the business, on the pandemic, as well as on the commodity prices, supply chain issues, including the chip shortages. So in spite of all the dynamic and challenging business environment, your company has made a reasonable performance, and I would like to take you through the highlights of Q3 and the 9 months ended FY21-22. The standalone financial highlights I will just brief you. Turnover has grown 54%, but strictly speaking, the 9 months are not comparable with the previous 9 months because of the Sherman lockdown last year. So, but the turnover has increased by 1,552 crore against 1,011 crore. PBT of 168 crore versus 75 crore in the previous year. Crossed 100 crore PAT, highest ever so far. Last year, full year, we had 97 crore PAT. EBITDA has grown by 29%, 294 crore to 380 crore. CapEx for the quarter, including maintenance CapEx, has been 143 crore. This was for technological upgradation, maintenance CapEx, and emerging opportunities. I will just run through the ratios of the key financial ratios. Debt equity is almost same, 0.7 to 0.72. I think we are not able to make quick inroads because of the working capital requirements, which I will explain later. Debt to EBITDA has improved from 1.51 from 1.57. EBITDA margin, because of the commodity price increase and top line corresponding growth, the EBITDA margin stands at 24%, vis-a-vis 29%. EBIT margin is almost same, 15% compared to the previous year, full year of 16%. PBT is 11% for these 9 months, vis-a-vis 10% for the full last year. PAT is 7% for 9 months, versus March 21, PAT of 6%. ROC annualized is 19% pre-tax, and for March 21 we had 16%. ROE is 14%, versus 11%. EPS is 69 versus 48. I will run past the segment-wise revenue. The 9 months figure for the auto powertrain is 817 crore. This was 524 crore, a growth of 56%. The auto aluminum is 308 crore. Comparable 9 months was 216 crore last year, a 43% growth. Industrial engineering is 427 crore. This last year was 271, 58% growth. Overall 1,552 versus 1,011 crore. Segment-wise EBIT, 9 month figure on the auto powertrain is 218 crore at 27%, and 9 months for 2021 was 125 crore, was at a 24% EBIT. This is mainly because of the commodity price change, increase, and also the mixture of a change in the machining charges versus the sales charges. In the auto aluminum, we had an EBIT of 8 crore at 3%. Last year for 9 months it was 2 crore at 1%. Industrial engineering 36 crore at 8% EBIT. Last year it was 9 months was 56 crore at 21% EBIT. This is mainly the growth of storage business, which I can take it in the Q&A. Unallocated expenses was 34 crore, and this year, last year it was 31 crore, a marginal increase. The auto powertrain segment has grown 56%. from 524 crore to 817. Auto aluminum has grown from 216 to 308. Some of it is because of the commodity price increase. Industrial engineering segment has grown by 58%, 271 crore to 427. Storage business has clocked a very healthy top line of 188 crore in 9 months when compared to the last year whole year sales of 104 crore. The automotive powertrain EBIT has been 218 crore compared to last year was 125 crore. Auto aluminum EBIT has been 8 crore versus 2 crore. Industrial engineering EBIT has been 36 crore against 56 crore. I'll make a comparison on Q3 versus Q3 compared to last year, because I think last year Q3 the business got back to almost some sort of normalcy. Powertrain segment achieved highest ever quarterly turnover 292 crore Q3. PBT 57 crore against 63 crore against Q3, mainly due to higher raw material prices, lower machining value. Tractor business was down, and also construction machinery was down on a corresponding period on year-on-year basis. And the raw material price has also inflated the top line, which is leading to a lower margin. Segment-wise results for Q3 is Q3. Auto powertrain 292 crore for 21-22. This was 267 crore. We had a growth of 9%. Auto aluminum 118 crore for Q3 versus 111 crore for 2021, 6% growth. Industrial engineering 141 crore versus 108 crore at 31% growth. So overall, we have a growth of 14%. EBIT-wise, there has been absolute number Q3 on auto powertrain 69 crore. Last year it was higher for Q3, it was 79 crore. Auto aluminum 5 crore and the same 5 crore last year. Industrial engineering 13 crore, this was 21 crore last year. Overall, we had an EBIT of 77 crore for Q3 this year. Last year it was 89 crore. What was different is that last year Q3 we are ramping up, and this year Q3 we are little, the inventory pipeline was full, and we had a good Q2, and our customers had a pipeline inventory, and they were rationalizing their inventory. Maybe the retail sales was okay, but their procurement from suppliers like us was lesser. So with this, I think I will open the floor to Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Joseph George from IIFL. Please go ahead.
Thank you for the opportunity. I had 3 questions. One is, in the preceding Concall, you had talked about new business in the automotive aluminum segment, and as a result, the revenue and margin improving substantially over the next couple of years. Just wanted to check change in that narrative, or what you communicated saying to Q call still holds.
What I communicated in Q2 fully holds, and I think there was communication from our customer that they may take it up a little earlier than the volume may pick up in early FY24 itself instead of late FY24. So this is one advantage what we have. And one more new inquiry which is at the final stages of concluding is for a domestic Tier 1 supplier, a multinational Tier 1 supplier who makes gearboxes for the passenger car. They have audited us, and almost they are waiting for the final results for awarding the business to us. I will share that as and when we get the business awarded. This is another breakthrough. But whatever I share in Q2 it still holds good. The business is intact.
Perfect, sir. So the next question that I had was in relation to in a couple of segments, which is auto, aluminum, as well as storage solutions. Both these segments in the past have seen margin pressure because of late pass-through of the rise in commodity costs. So are we anywhere close to stabilization on that front, either in the form of better pass-through or better pricing? So do we expect margins in these two segments to get to what you believe would be normal maybe in the next 1 or 2 quarters?
For the auto powertrain, there is no question of any pass-through issue. Only the top line is getting inflated because of the straight pass-through, but we are not having a margin that whenever.
Sorry, my question was on auto, aluminum, and storage solutions.
Okay, storage solution. Okay. In the auto aluminum, the pass-through is more or less now it is, I will not say perfect, but it is near the real-time status because the volume fluctuation is there on month, and whatever is customer projections, they are not able to honor it, and we are predominantly still dependent on the two-wheeler business for more than 80%. So there is a start-stop situation about the domestic business, the two-wheeler business doing well. There is also the margin pressure is not coming now from commodity, but is coming from the operating leverage which we are having on the auto aluminum business, the two-wheeler business which is down. On the storage business, we were hit on the pass-through. One thing is our biggest competitor, I think, was holding some inventory, and they were able to give a better pricing in the market wherever we are competing strongly. But still, we wanted to gain market share on the storage business. And by the time we used to get an order and go back to the market to buy the steel, there was a situation about the price increase. So on storage business, we are not didn't get the pass-through this year, but hopefully in the coming year, with stabilization of the prices, we'll get the pass-through.
Understood, sir. And the last question that I had was, what is the outlook for the MHCV industry, say, in 4Q compared to 3Q? I know you can't take customer names, but based on what you're hearing from the customers, you can extrapolate that to the industry. How do you think industry volumes in 4Q looks compared to 3Q? Is there any softness because of COVID, etc., that you're hearing from your customers?
The biggest industry player and was also our customer and also a leading multinational player, at least the industry leader in the country, they are having in model mix what I see is around 85% heavy duty and only 15% medium duty. This is a good sign for us. That means the economics of scale, that is the bigger tonnage trucks which are more economical for the fleet owners, are selling more, so the modernization of the trucks are continuing. We are having more value add per truck on the heavy duty segment, and more and more we see the next level of heavy duty engines, and also the gearboxes are getting developed by all the most of the major players. This is a very, very healthy sign which we see will lead to better growth prospects for our business as far as Craftsman is concerned. The CRISIL report for which came out last quarter also indicated some growth in the freight rates in their index, which was reported, and this is translating into better order position. We see currently a lot of signs on the ground for increased volumes. So we are very hopeful this quarter we'll have a good growth in sales.
Understood, sir. Thank you.
Thank you. The next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Yeah. Hi, sir. Thank you for taking the question. So my first question is on the powertrain business. Can you highlight basically what was the machining revenue mix and what was the revenues that came from RM plus machining? Because the margins in the powertrain segment has come off a bit last quarter. So just wanted to understand the mix factor in this segment.
Okay. I will first reload the numbers, then I will go to the specifics about customer and why it has happened. The auto powertrain, I will just compare Q2 to Q3 because you may be very much aware of Q2. The top line is more or less same. Q2 we had a 292 crore, and the same 292 crore we have reported for Q3. But the value addition portion for Q2 was 203 crore. But for Q3 it has been 180 crore. Why is because we had more of the South American business more going and also the bit material business going, but where there's a reduction of the machining business, mainly in the farm sector, that has impacted us on the value addition portion. So this reduction of value addition from 203 crore to 190 crore as a 13 crore drop has resulted in an EBITDA drop of around the same level of 11 crore, and an increased depreciation of 4 crore has led to an EBIT drop of from 86 crore to 69 crore. But this is also operating leverage. We had better operating leverage. The top line, even though it is showing the same number, the absolute amount of capacity utilization of the plant has dropped on Q3 when compared to Q2. There was inventory pile up on the farm sector because they were producing 30% more than what they're selling. And this normally in Q3 we see this situation. There is a lag. There is an inventory correction which happens. There may be some sales, the retail sales may be different, but what we see on the ground level is every year we face the same phenomena in Q3.
Got it. Sir, just a follow-up of the previous question asked by the last participant. On the MHCV side, typically 4Q is a seasonally strong quarter, Jan to March versus October to December. So whatever pickup you are seeing in the MHCV industry, is it more because of seasonality in 4Q? Or even on a YOY growth, you are seeing some strong traction in the overall MHCV industry? And what would be your outlook for the industry for the year to come in FY23-24?
We are seeing the tonnage. In tonnage terms, we are seeing one of the highest numbers reported, because what was the vehicle numbers reported in FY19 are not strictly comparable with the current FY22 or going forward for FY23, because the average tonnage has changed. As I mentioned a little earlier, it is 84 to 86% is the sale of heavy duty versus 14 to 16% on the medium duty by the industry leader. And we see this trend more and more going forward. So we cannot compare the numbers, but on the tonnage front, the replacement cycle will set in next year, that is in FY23, for the trucks which has crossed around 440,000 kilometers, which is due for modernization. So we are very confident that in the second half of next year, the next financial year, we'll buck the trend of this cyclicity or seasonality of the business, and more uniform sales will happen. I think the trend will be set from this month onwards itself on the heavy duty segment. This is what we see on the ground.
Okay, thank you. Sir, so one question. In your opening remarks, you talked about working requirements being higher. Even last quarter, we saw inventory levels were higher because of a strategic purchase of certain raw material. So we are seeing a continuation of that even now. And if you can share some numbers as to what is the scope of working capital requirement going ahead, and how it can help us deleverage further our balance sheet. Wherever
we are procuring material, or maybe there are sometimes it's a pass-through with a straight pass-through, sometimes it may be an indirect pass-through. We have seen not only the basic commodity, but also the elements which is going into the basic commodity, like silicon and all, going through a big troublesome phase of shortage, and it leads to quality issues, it leads to delivery issues. There are shipment delays also, which is causing a lot of anxiety for directly to us, sometimes directly to our suppliers. Sometimes there is sometimes a mismatch between the lead times which was planned and which was there, and the uncertainty of customer volumes also is was hampering us. So we took a little strategic decision on steel, on the storage business, to increase inventory, and based on schedules of the other customers, we had procured material, but that didn't fructify into actual business. For a certain reason, the customers' schedules dropped. So there is a temporary increase in working capital requirement, which quarter on quarter we will see that next 2 quarters it will drop. We expect around 80 crore drop in the current quarter on the working capital requirements, and another 50 crore in the Q1 is what we expect. But what we need to remember is the commodity price, there is a reset of around 20 to 30%. both on steel as well as aluminum. That portion we have to factor in as the factor in our working capital requirements. Otherwise, the other correction will happen.
Sure. So what you mean is, over the next couple of quarters, we should see more than 100 crores reduction in working capital, and that should help lower our debt levels as well, right?
Yes, we are expecting 80 crore, 60 to 80 crore surely in this quarter itself.
Got it, sir. Got it. And so my last question would be, if you can share some details on the new order wins that you have seen over the last 3 to 6 months across segments, and especially in the aluminum product segment where we are looking to significantly scale up our revenues going ahead. So any big new order wins across segments, some color on that would be very, very helpful. That would be my last question.
For the auto powertrain, the small order wins I will not add now, but there are many small order wins which have got. We got increased market share across the segments. There is also a move from the customers to reduce the amount of suppliers and things like that. We are benefiting out of that. There's consolidation in the supply chain. The other order win we got was from a construction machinery manufacturer, the American, the big name, and we got an industrial engine for international business. The order is being secured by us. So the next order win is likely to be expected this month, very close to finalization, is for a localization of the passenger vehicle cylinder block, which is getting currently imported from Europe by a leading European manufacturer who is supplying engines to leading SUV manufacturers in the country. So this is a ready-made market which we're expecting. I'm not in liberty to spell out the names, but it's a localization win which will be a big feather in our cap as and when we get that order. But we're very close to concluding the deal, but I will not like to say more than that now. On the auto powertrain, auto aluminum, the Stellantis development is going on, and meanwhile the Tier 1 leading multinational Japanese Tier 1 gearbox manufacturer has approached us, audited our Bangalore facility, has approved us, and the audit is going on in our Coimbatore facility. We're likely to get some good business on the automatic gearbox housings as well as the E-axle aluminum parts. What is more interesting is for the higher tonnage missions, including the 3,000 ton, which is under discussion. But the result will be known within 2-3 weeks of this business. These are the major order wins on the auto aluminum.
Sir, anything on industrial segment?
In the industrial engine segment, the traction on the storage business is very high. We will close this year at around 275 crore, which was 108 crore last year. And this growth will continue. We are expecting 20-30% growth in the going forward next year. One good thing in the growth is it is a mixture of the conventional storage solutions and also the automated storage solutions. And we have got a pending order of around more than 50 crore on the automated storage solutions, which we have only one Indian player. All other are multinational players. So this is a good trend what we are seeing in the storage solutions. In the other area on the capex cycle, India is set to see the capex cycle, but hopefully that will kick in the next coming quarters, which will see more demand from us. But our export business is doing well, and we are going to have at least 10-20% growth over the last year export this year on the direct export business. We are also looking at very critical machining opportunities in the capex goods. The capex goods are across different segments of the different end-use segments, which I would not like to elaborate at this stage. But we have won some orders already, and we are also under discussion for the renewable energy capital goods sector, where there are not many players in India, and a lot of import is happening from our main competitor in the Far East. So I think the localization trend is increasing, and we are looking at, after a long time, an opportunity in the renewable energy sector, in the industrial engineering sector.
So much, and good to hear so many order wins. So just one clarification: this Tier 1 gearbox manufacturer of Stellantis, if we happen to win the order, will it be on top of the order that we already have from the Stellantis group to supply some of the castings and machining?
Sorry to interrupt you. The gearbox manufacturer is not Stellantis, not a Stellantis supplier also. This is a Japanese supplier who supplies to the top two names of the Japanese manufacturers in India, and this is an established player. They're also supplying to the Indian OEMs also. It's a world-renowned automatic gearbox manufacturer. This is a Japanese manufacturer, and they supply to Japanese and Indian players.
And sir, the order will be to supply in the domestic market, or it will be from an export perspective?
No, it is for the domestic market, and this is, I think, it's only the beginning. We expect that we may also get opportunity in the future for export.
Okay, sir. Thank you. Thank you so much for the clarity. I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Janesh Gandhi from Motilal Oswal. Please go ahead.
Hi, sir. Couple of clarifications. One is on your staff cost. We have seen a reasonable increase on QoQ basis. Is there any one-off in that, or this is the new normal for us?
Sorry, the clarity is not there, and I was not able to. The voice was.
Yeah, is it better? Can you hear me now?
Yes, I can hear you now.
So one clarification on the staff cost. We have seen a reasonable QoQ increase in staff cost. So is there any one-off, or this is a normalized level now?
This is a normalized level. We have given the salary increase, which was just a minute. I'll give you the staff cost means bonus. Yeah, bonus. That is for the I think we have released the bonus of around 7 crore for the quarter. This is one-off.
Okay. Got it. Secondly, with respect to the revenue growth which we have seen, would you be able to take out the RM cost benefit in that and primarily talk of more organic growth there vis-a-vis the reported number?
Okay, I think that's a very good question. I would say I will go by segment wise. I think for the auto powertrain, shall I go for the Q4? Q3 number, or you want for the 9-month number? Which is preferable for you? I'll give you for the Q3 number.
Okay, no problem.
Okay.
Yeah.
The top line on the auto powertrain for Q3 is 292 crore, and value addition has been 190 crore.
Okay.
And on the auto aluminum, 118 crore was the top line, and the value addition has been 43 crore.
Okay.
So that is a very healthy value addition. So the healthy value addition is not translated into EBIT for the simple reason operating leverage is not enough.
Right. Okay.
And on the industrial engineering, we had a 140 crore top line, and the value addition has been 65 crore.
Okay. And similar number for 3Q last year? Value addition number for 3Q last year?
Yeah, Q3 last year. Okay, Q3 last year, auto powertrain was top line was 266.
Mm-hmm.
Value addition was 176.
Okay.
And auto aluminum was 110.
Right.
And the value addition was 42 crore.
Okay. And industrial?
Industrial engineering 107 crore, and the value addition was 62 crore.
62. Okay, got it. And lastly, with respect to the capex, so in 9 months we have invested about 143 crore. For full year FY22 and 23, what kind of capex are we looking at?
What we are looking at is we are seeing a lot of opportunity on the auto powertrain portion of the machining business as well as machining business in the industrial engineering. So we are having a depreciation of 200 crore. So the maintenance capex, unfortunately, I think quarter on quarter the capex cost is going up. The machinery price has been increasing, so we do not want to delay some of the purchases because same machinery we purchase next year maybe another 20% more. So we had taken some proactive measure to book some machinery at the older price, and we are having them delivered now. So we still, I think we will need 100 crore maintenance capex because the 200 crore depreciation today 1:1 we want to replace, we have to pay 300 crore, but we are able to contain it at 100 crore maintenance capex. And any new opportunities or any specific equipment which we need, I think we will operate as and when needed.
Got it. So the full year will be, 100 crore maintenance and another 100 crore the growth capex. Would that be a reasonable assumption?
Yes, reasonable assumption, and any expansion in absolute EBITDA number will healthily flow to the post-payment, EBIT level. I think that is what we are thinking of.
Got it. Great, sir. Thanks and all the best.
Thank you. The next question is from the line of Chirag Jain from DAM Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just wanted a clarification.
I'm sorry to interrupt you, Mr. Jain, but we cannot hear you, sir. Your voice is very low. Can you please check?
Yeah. Is it better now?
Yes, please go ahead.
Yeah. Just a clarification on the auto powertrain business. You mentioned that obviously there has been some product mix impact as well as some rationalization of channel inventory in the farm sector. So is it largely behind? Because more from the perspective of M&HCV, we have seen almost 25% plus production increase compared to last quarter in September quarter versus December quarter. But the overall revenues have largely remained stagnant. So maybe some more perspective in terms of the revenue mix that we have in terms of exposure towards farm and the other segments, and what have actually driven, let's say, the more or less flattish revenues in this quarter versus last quarter.
For Daimler alone, there has been an increase of around 20 crore Q2 versus Q3. This is substantial increase, which is 25% increase because we have ramped up for their requirement for Brazil. So that is the increase. But whereas the machining business has dropped by 13 crore because of rationalization of inventory in the farm sector, and the construction machinery has been still pretty low. So both of that will get corrected in the current quarter.
Okay. And any number that you can share in terms of capacity utilization for the third quarter? You mentioned that there has been a dip sequentially, but any number that you can share for the auto powertrain business?
Auto powertrain business has been very poor in Q3. I would say it is less than the 60%.
Okay, and that should get corrected in fourth quarter as most of the business segments should revive, end user segment.
Normally for us, Q4 is highest. Even last year, if you would have seen that we had performed very well on Q4, and we expect similar lines on this year also.
Okay, and just last thing on the aluminium business, since bulk of our current revenue is exposed to the two-wheelers, especially TVS and Enfield, are we seeing any green shoots over there in terms of production schedules, let's say, improving?
It is in the public domain. I will not like to repeat myself. I think two-wheeler market is very much down because of the affordability and the financing of the two-wheeler. But I think our customers are doing pretty well with the exports. At least for one of the customers is doing very well for exports. So they have managed to offset some of the degrowth in the domestic industry with exports. So now it is reasonably stable. Hopefully, with the economy picking up, the domestic market also has to come back. But there is also a lot of opportunity for Craftsman because we are very close. Our plant is a major die casting plant is in Coimbatore and Bangalore, and we have been approached by the many EV startups. There are 17 startups in Bangalore who have made products, but now looking at productionizing them or looking at cost rationalization. What they've done by different methodologies, they're trying to do the automotive method now. So we have got very solid inquiries. So this will improve as we see, as going forward on quarter.
Okay, thank you. That's it from my side.
And the passenger vehicle business, which will kick in FY23, 25, end of 23 and FY24, will lead to better capacity utilization on the automobile for us.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for the opportunity, sir. Sir, despite high value additions and lower pure machining revenue, the top line remain muted in power gen segment. Is it because
sorry, I'm not able to hear. The clarity of the voice is not there. Sorry.
Are you able to hear me, sir? Now?
Now it's slightly better.
Sir, my question is related with the powertrain segment. Despite high value addition and lower pure machining revenue, top line remain muted. Is it because of the high inventory at the customer level?
Yes, I think tractors production was happening continuously at 100,000 units a month, whereas sales were around 70,000 units. So there has been a relative inventory increase. So correction is happening.
And so what is the revenue and margin outlook for the quarter 4 for powertrain business given the slowdown in the Class 8 trucks orders and muted outlook for the tractor segment?
We are not dependent too much on the Class 8 truck order for North America. Yes, we are doing Tier 2 exports. But I think the domestic our customers have given a very, very strong projection, and even the Tier 2 exports to South America is also having very strong numbers for the year. So we see that we will be performing well in Q4. I don't see any reason for the muted performance for Q4.
So you are also Tier 2 supplier for the nail cast, and these companies supplies mostly in the North American market. So is there any?
You're right. You're right. But the point is, we got new order wins which are yet to be productionized, and that will carry us through for the next 2-3 quarters.
So how much growth you are looking in this powertrain business for the quarter 4?
With the correction of some inventory warehouse and whatever maybe, I think still we'll be growing at a healthy double digit.
In quarter 4?
Yes.
And what about the margins? It will come back to the normal level?
Yes, normal level margins will be there for Q4.
Okay. And sir, how much export contribution in overall revenue? I'm talking about the direct and indirect.
Direct and indirect, both put together. Direct and indirect put together maybe 22-25%, something like this. 20-23%.
And how was the performance Q3 versus Q3 FY22 versus Q3 FY21 in export front?
Export front, we are almost, I think, for the 9-month figure itself, we are very close to the last year number, direct export. And Tier 2 export also, we are very close to the number. So I don't see that, we will be surpassing those numbers, last year numbers by January end itself.
Okay, sir. My next question is from the aluminum segment. This quarter, total asset size has gone up from the 545 crore to 700 crore. Is there any capacity expansion in aluminum segment, sir?
Not really on the capacity. I think one is the lead time for procurement of aluminum and the opening of LC and the prepayment of the material for shipment to secure the material. I think the working capital portion only is the majority. I would say 80% would have been the working capital portion, which will get corrected because shipping delays are there. Sometimes on a FOB basis, we are taking material and it's a problem because of the container issue and things like that. This will get corrected in the coming 2 quarters.
And sir, in the industrial segment, how much revenue was from the storage solution business in Q3?
I mean, I'll just take out the numbers. 180 crore, I think you have done for 57 crore for Q3.
Last quarter, you had mentioned that storage solution revenue is 134 crores in first half.
188 crore is the cumulative number for this 9-month period.
Only 88 crores. 188 crores.
188. 188. Because last year it was 108.
So despite the lower storage solution business, we are not able to see the margin expansion. As you earlier mentioned that the company is able to pass on contract manufacturing and industrial casting segment, but it is difficult to pass on the storage solution segment.
The storage solution, we are looking for referral orders. I'm happy to share one point with them, and one point with all the view is that we are at 30% level compared to the industry leader in the storage business. I think that is a remarkable point which are there for last 3 decades in the business. I think in a short period of time we are very close to being number 2, if not being number 2 for this year, in this year.
So despite this lower revenue from this storage solution business, our margin is just 9%, which is much lower versus the earlier margin of 15 to 22%. So what are the figures for the margin expansion going ahead in the industrial segment?
Yeah, earlier we had little more stable steel prices, and we are not in the I think on the crossfire or the competition. We were operating under the radar, but today we are talked about in the market, and wherever we are present, the number 1 and number 2 players are very, very aggressive on not letting the order go. So we have to fight for the order, and in the case, I think as a new entrant, we have to forego margins to win the order. And we have succeeded to have good names where we are able to satisfy them on quality and technology of the product. So this is I would say, seeding for the future. We are just getting our feet into this business, which is a big growth area. And surely, when we grow, we will be also able to plan our steel purchase in a better way based on the past consumption. And sometimes the lead times for the steel manufacturing, in steel suppliers to supply directly was a problem, and we had to resort to buying from traders. But I think this is a short-term phenomena where next 6 months, 9 months, I think we will be more stable on the margins.
So as the commodity prices is moderating, so what is the outlook for the margin for the industrial segment for the FY23, given that this inflationary situation and the pickup in the industrial activity? So can we go back to the 15-20% kind of the margin in this segment?
I think the model mix has changed, right? We are only in the contract manufacturing where it is, the storage business by itself is material intensive. So necessarily we have to change the ratios, but the top line growth will be higher. So the absolute EBITDA number growth will be in good 2 digits going forward, at least in Q3, Q4 next year. We are confident about that. I think the EBITDA percentage we have to reset based on the new product mix.
Thank you. That's all from my side.
Thank you. The next question is from the line of T.S. Vijay Sarthi from Anand Rathi. Please go ahead.
For the opportunity, sir. A couple of questions. One, could you share the indirect exports for the quarter in the powertrain business, if it's possible? Number 1. Number 2, has there been any increase in the share of business in aluminum business with your existing customers? Number 2. Third is, could you share, I know it's difficult, but if possible, could you share the opportunity size that you would probably envisage in the localization of cylinder blocks that you had highlighted?
I will answer your second question first. I think there is 2 things which are happening. One is whatever is getting imported is getting localized. We are getting opportunity. One thing, it is a no-no for diesel engine manufacturing in Europe. That is throwing a lot of opportunity that India is going to become the hub for diesel engine manufacturing for the rest of the world, mainly for other countries which are still not going to adopt EV quickly. The third most important point on the same thing is that the Asian majors, the auto majors, mainly from Japan and are in Korea are looking at India as a global hub for manufacturing for the diesel engines, and we see that they are setting up facility where we are having an edge over other countries like Thailand, Vietnam, or Indonesia, where the manufacturing infrastructure is not so great for the engine manufacturing. So we see that this opportunity will continue to help us to grow on the powertrain segment on this matter. And when you talk about powertrain, we are not exposed to passenger vehicle in any big way. Overall, in the entire powertrain business, for us, around 10% only is on the passenger vehicle. More than 55% is coming from the commercial vehicles, and the 20% is coming from farm sector and construction machinery. So even on the passenger vehicles, we don't see that degrowing because the still exposure is less. Another important point is on the commercial vehicle segment, we see the medium duty trucks, there is a move towards using the same IC engine, internal combustion engine, for CNG, and this is gaining momentum. And we will see that even on the heavy duty commercial vehicle, when new engine platforms getting evolved, which may be common for the conventional fossil type fuel like diesel, and maybe the more cleaner fuel like CNG and hydrogen. And I think these sort of engines will be almost zero emission, which will be able to compete with other technologies. So as our powertrain business by itself, we are quite confident that it will continue to grow because of the segment where we sit in. As I mentioned earlier, that we have won an industrial engine order for export from a American big company where they make industrial engines. And even the other engine supplier which is present in India supplying to trucks, they also swear by the one norm that they will make clean diesel engines. So I think this is where we are also saying that what we invested in will continue to grow, and we are not worried about that particular point. You asked about aluminium, whether we increased market share. I cannot comment on the market share because every month it is changing because which product is selling. Sometimes it's only exports which are happening, and sometimes it's domestic. It may be changing, but what I can say that we are very competitive, and we have got the right product mix with us. New developments are continuously given by existing customers. That far I can share with you. You talked about what is the indirect exports, what is the absolute revenue. In indirect exports, there are some things where we are owning responsibility for the material. That may be to the tune of maybe around 15-20 crore a month, I think that is happening, indirect exports. Apart from that, the pure machining charges where it's indirect exports, maybe another 6-7 crore. So around 20 crores is happening there.
Has that number reduced YOY, sir?
No, it is not reduced. Actually, it is increased.
And when do you expect this proportion of passenger car in your powertrain to move to a sizable revenue? So should we see that happening from FY23, or there is still some time away?
This will depend on our government decisions on the way forward, whether it will be they're going to offer subsidy for hybrids or not. If they offer for subsidy for hybrids, I think the passenger vehicle business will has to develop new smaller engines. We see currently there are hardly no platforms which are pure EV platforms, or only I think our domestic major player has developed common platforms which they're utilizing to their best benefit. You can see they're launching EVs continuously. So every vehicle manufacturer has to move to platforms which are common. And you know that on EV the platform is different because it has to accommodate the battery weight at the bottom. So we see a lot of aluminum parts which will be also being utilized there. I can share little candidly because I'm not supposed to speak on this. We are only tier 1, tier 2 suppliers. I think the fuel efficiency matters a lot going forward, and the corporate average fuel efficiency, CAFE norms will be very important. The carbon footprint has to be reduced. So lightweighting will be the norm going forward. It is already a big delay which is there. There has to be some revolution there. What we see today is heavy duty trucks, because more than 80% of trucks are heavy duty and only 14-15% are medium duty. Similarly, we will see that lightweighting will start in a big way on the aluminum business.
Is it very difficult to have an automatic pass-through for in industrial business with respect to RM cost? What is the nature of this? Why is it so difficult? Number one. Number two, if this is the case, then do we see a situation where we grow very strong on the top line and while absolute EBITDA might still get secured, profitability might come down? Is that the way one should look at industrial business?
No, it is a black swan event, I would say that steel price increasing 50-60% within a year, it has never happened, and the shortage of steel also, which was leading to, I think, even premium over the market prices was there. It's a one time, and by the time we have taken the order and time to procure, everything has changed. This is not going to continue, surely. So now we are factoring in contracts also saying that the steel price applicable at the time of the delivery point will be applicable, something like that. Wherever possible, we are trying to do that. I think the entire industry will adjust.
The entire industrial business with respect to RM cost, is it negotiation or some are automatic pass-through like the other segments of yours?
In the industrial segment, the business is out of pass-through. It is on a quarterly basis based on LME prices. There's a surcharge invoice. But on the other products, what we are making, assemblies, sub-assemblies, fully finished products, there we have to reset the prices. We don't want to reset the prices every month. We are going to execute big price increases in the coming quarter because now that we know what is the current raw material, this correction was not possible after getting an order and then seeing the raw material price going up.
Finally, sir, what is the value addition in the industrial business this year?
Okay. The industrial engineering business for the Q4, the top line was 140 crore and the value addition was 65 crore.
Okay. Thank you, sir. Thank you. Good luck.
Thank you.
Thank you. The next question is from the line of Jitendra Khatri from Tata Mutual Fund. Please go ahead.
Yeah, sir. Thank you. What will be in your powertrain business? What will be the petrol diesel mix?
If you take powertrain business as 100, 90% is not related to passenger vehicles. This is 100% diesel, totally. Diesel or alternate fuel like CNG and things like that. In the 10% passenger vehicle business, what we have, it is again 80% diesel and 20% petrol.
Okay. And sir, in your exports, how much will be powertrain?
We don't do any powertrain exports at all directly.
Okay. Okay, and lastly, in your powertrain, I wanted to know if you do something for the Japanese as well, like Toyota, Honda in India.
We are now very close to getting awarded some business from a Tier 1 supplier to Toyota, who is making gearboxes. So we are got good inquiries for automatic gearbox as well as e-axle.
Okay, the CVT gearbox. Okay, so will it be substantially more difficult to get on board with a Japanese manufacturer in India, or how does it work, like compared to a Volkswagen or compared to a Maruti?
The very fact that we are being considered, we have been audited by the Japanese, the Bangalore plant audit is completed, and this plant is getting audited today, actually, practically. So, in Coimbatore plant, very fact they are spending energy. They're very serious about doing it. The Japanese suppliers by themselves are having a presence. I think they're ability to expand, or maybe it is the more entrenched Indian suppliers may be given a chance. That's what I see.
Okay. Thank you so much. Yeah.
Thank you.
Thank you. The next question is from the line of Dhaval Shah from Swan Investment. Please go ahead.
Hello.
Hello.
Yeah, hi, sir. Sir, first, what is the capacity utilization in the aluminum component business for the current quarter?
Current quarter means you're talking about Q4 or Q3?
December. Sorry.
December quarter. It has been around 40% to 40% range.
Okay. Fine. So now, we in our previous interaction, we had guided for around 18% kind of EBITDA margin in this aluminum business. So now, how do we see this margin trajectory going forward over next 2 to 3 years? Now, in FY23, we have PSA order which will start contributing. So how do you see the growth rate of the aluminum component business and the margin?
I will take out the Q2 numbers for this year for auto aluminum and Q3. Q2 we have done an 112 crore top line and we had an EBITDA of 17 crore. And for Q3 we had 118 crore top line and a 17 crore again EBITDA. So it has been upward of 15 crore in spite of very low capacity utilization. So we are not lagging on EBITDA in spite of when operating leverage not kicking in. But the point is the depreciation, the capacity utilization being so high, we hit on the depreciation and EBIT is the problem.
Okay, got it, sir. And in terms of our growth rate, the next 2 years should be quite high in terms of the growth rate, given PSA order is contributing and plus a lot of other inquiries which are coming to you.
Yes, the auto aluminum, when capacity utilization improves, surely the margins will improve, number one. Number two, when passenger vehicles and more complicated parts which are for the higher tonnage machines come in, there is better value addition. So there also margins will improve. So we are very confident that when we are operating at around 15% EBITDA with such a low capacity utilization, I think we are very efficient. That is why we are also winning business.
So next year, should we look at around 30-35% kind of growth?
Yes, next year we can look at 30-35% growth.
On the aluminum side, okay. And then that would certainly give us a close to our guided EBITDA margin as well.
Yes.
Okay. Now coming to powertrain, as you said, the tractor segment has led to the drop in the margin. Now in the September quarter also we had around negative 5% industry growth for the tractor, and now December was negative 10%. And we also see some pressure on the farm economy as well. So how do you see this segment doing in terms of again the margin, the growth rate? Yeah, because last couple of quarters we've never had such low margin, given tractor was doing well. So, but while on the other side we are expecting MHCV higher tonnage to do well. So need some understanding on that side.
I would more look at it when you're looking at the margin, we have to look at the margin on the value addition rather than on the top line, because that one thing has happened is there is a commodity pass-through in the case of where we buy cylinder blocks and supply to our customers. There has been a 20%, 15% increase. So it's a straight pass-through. So the margin may get depressed. But I think the value addition is what we need to look at it on the margin.
Correct. So this value addition, given, the tractor might be soft, tractor industry might be soft, but MHCV is better. So your value addition will go back to which quarter if you had to take a lead from the previous quarters?
I more look at it last year Q4 and this year Q4. In spite of farm sector still lagging behind, we should be on similar performance on the powertrain business.
Okay, in terms of the value addition.
Yes.
Okay, fine, sir. And sir, now coming on the industrial and engineering business, we are currently in market share gain mode, and even the private capex has currently not yet picked up the way we were discussing last 3-4 quarters. So again on this side, any margin guidance would you like to share? Because I believe the potential is there to do around 20% kind of EBIT in this segment, but we are much lower than that number.
Nobody is investing in the industrial engineering manufacturing activity. That is positive for us. Then when there is an increase in, anybody will require a few years to put up capacities and get their act together, because it is not easily scalable. So I would rather wait and watch and give a more concrete answer going forward in the next quarter. And
okay, on the margin front.
Yes.
Okay. So currently, on the storage solution side, any specific market share figure in mind, which will help us?
We want to be number 2 in the coming year. That's what we are striving.
Okay. And sir, now on the accounting side, what is the absolute debt number and our debt reduction strategy?
Debt reduction, I think we will not be able to do as planned because of the commodity price increase. We are looking at around 50 to 80 crore debt reduction when compared to last financial year.
Sorry, 50 to 80 crore?
Yes.
For the current year?
Yes.
Okay. Fine, sir. Thank you.
Thank you. I think there is 4 more questions in the queue.
Thank you. Sir, shall we take the next question?
Yes, please.
Thank you so much. The next question is from the line of Chintan Gandoria from Alpha Accurate Advisors Private Limited. Please go ahead.
Hello, sir. Sir, I have 3 questions. Firstly, on the powertrain segment, so we have if the MHCV has seen a growth of 20% on a quarter-on-quarter basis, then could we say that tractor segment revenue from last quarter to current quarter must have seen a severe decline of 50% plus?
Yes, sir. The market, the sales, retail sales, I think you will know better, but I think 25% is reduction. So when inventory is a 3-month pipeline is built in for a higher sale number, they have to procure at 50% level for at least 3 months to bring down the realistic inventory.
Okay. And secondly, you said about 2 new orders that we are about to receive. One on the aluminium product side from the gearbox manufacturer, and one on the powertrain side from the European manufacturer.
Yes.
So, can you quantify what kind of order we might be receiving?
They seem to be having a bigger plan which is not shared. So I would not comment on that until we get the order, I think. Yes.
Okay. And so lastly, on our aluminium business, so since TVS is one of our major clients, so are we working with TVS also on their electric side? Are we supplying die casting components for their electric vehicle?
So far, no, but I think we are a neutral supplier. Yes, TVS is a very esteemed customer of us. We are trying to align whatever they need for their future growth whenever we are given an opportunity. We are also, TVS, I understand, also invested in some startups. So we are waiting to watch where the volumes are coming up. The other lower volume EV players we are treating as almost on par with industrial engineering aluminum and looking at lower volume and higher value addition. They cannot be clubbed with the automotive because the volumes are low. So we are waiting and watching to emerge what is the premium space, what is the volume space, and things like that. It is too early now still.
Okay. And just lastly, within our aluminum segment, so what would be the contribution of engine component parts within this aluminum die casting business?
It is more than 80%.
More than 80%?
Yes.
Okay. And which are the components then, on the electric side we might be looking to manufacture in the aluminum segment?
There will be structural parts which will be coming in. They can be high-pressure die casting, gravity die casting, low-pressure die casting, all of them will be coming in, and we are present across all the segments. When you asked me about the question on what is the percentage of IC engine parts on the current manufacturing, I said 80%. But today, our esteemed manufacturers, esteemed government customers are doing a lot of export. The export percentage is growing by leaps and bounds. So we hope this number will continue to increase.
Okay. Thank you so much, sir, and wish you all the best.
Thank you. The next question is from the line of Priyank Chheda from Standard Chartered Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just have one question, sir, on the capex guidance of, you had alluded towards 225 crores of capex that you plan to increase your powertrain capacity by 8 to 10%. Is that on? Any update on that?
Oh, no, that you're talking about Nagpur, which will be done in phases. It is not about that. Overall capex, maintenance capex, we expect since our depreciation is around 225 crore a year, we need a maintenance capex of around 100 crore minimum, because the new equipment is costing to replace 1:1. It is 30-40% more costlier. But I think we are prolonging the equipment and managing it. And with the new opportunities coming up, both put together only, we are capping our capex to around 200 crore a year.
So 100 crores is for FY22 and then would be 200 crores for FY23. Is that understanding correct?
No, we are looking at both 200 crore a year. This year,
200 crore.
Yeah, maintenance capex itself is coming to around 100 crore, and we see opportunities where we should not miss out.
Okay, so maintenance capex would be 100 crores, and the additional capacity expansion capex would be another 100 crores.
Yes, correct.
All right. Thank you.
Thank you.
Thank you. The next question is from the line of Viraj Kacharia from Securities Investment Managers. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just have three product questions. First is on the domestic MHCV, the point which you made that you're seeing a strong recovery. In the past 12 months or so, we have been seeing various false positives also, freight rates going up and down, and then, talks of replacement demand kicking in, but not really coming in a big way. So what are we what kind of feedback or indications we're getting from OEs, or what are they saying which gives us more confidence that, 2023, CY 2022 should be a year where we see strong recovery in MHCV?
Okay, I think excellent question. I think 11 years we had set up on cylinder block and manufacturing for a German major, where at that time 10% was heavy-duty trucks and 90% was medium-duty trucks in India. And the question asked why many people were that where is the market for heavy-duty trucks in India? I mean, today we see in the last quarter itself, 85% has been the so-called heavy-duty and 15% is the medium-duty. The so-called heavy-duty is not really heavy-duty. These heavy-duty trucks in whatever being sold in India are still classified as medium-duty in developed Western Europe and North American market, because the haulage is different, the horsepower of the trucks are different. So we see a gradual evolution of our commercial vehicle segment to higher horsepower, higher gearbox torque and number of axles more. From an average 6-wheel truck, we are now averaging around 12 to 16-wheel truck. And today the government has been very, I would say, proactive in helping the fleet owners to reduce their cost of operations. The axle load has been revised upwards, I think, which was practical because the cost of the trucks are high in India. And because of that, the truck life might not be 1 million kilometers like what is happening in Europe or North America. We see more 400 to 500,000 kilometers as the 500,000 kilometers as the life for a useful life of a truck totally. So the scrappage policy may not be imposed by the government. By itself, the powertrain wear out will be there overall. And when we consider this fundamental aspect of the business, today the average coverage for a truck is now increased from 250 kilometers from pre-GST situation to 500 600 kilometers a day currently. So in this sort of situation, 5 years or 4 years is the life of the truck, so the replacement cycle will sit in totally. So and we'll move to a market where there will be growth requirement for trucks, and also there will be a replacement cycle. With that, the demand will be more steady, is my opinion.
Okay. Thank you for the elaborate answer. Second is, you talked about us potentially looking to close an export order for the powertrain. Now, you also talked about us not having any direct export in powertrain yet. So, is this the export order is through a tier 1 supplier in India, and hence, shipping through them to the export, or it's a direct export order we will be catering to?
What we supply to South America is we supply to the consolidation center of the same multinational in India who is consolidating it and exporting it. So the customer name is the same there. And even in the case of Stellantis, we are supplying to Stellantis for the consolidation center in India. So they will be handling the export. So we treat it as domestic business because we'll be selling in rupees. That's the way.
So the new order which we're talking about from a European player and potentially also.
That is for Indian market. It's an import replacement.
Okay. So basically, where I was,
importing the powertrain.
So where I was coming from, you talked about, you also made a point where OEs in say Europe or Japan, they're looking at India as a base, consolidated base for clean diesel kind of engine and powertrain solutions, manufacturing base. So if one was to get a perspective in terms of the opportunity scale, because a lot of these countries, say in Europe, are very aggressively pushing towards electrification, and more stringent regulations, say for a diesel fuel tech. So just trying to understand what is the opportunity space, where are we seeing this acceleration in terms of more orders being moved to India, which markets they may be from. Any perspective you can share?
We see Japanese manufacturers like Isuzu setting up base in India for export to Asian markets, which are maybe one level or 2 level emission levels below India, and also looking at the other African and other countries where emission levels are still at tier 1 or tier 2. We are at tier 6 level. So they are feeling that it will take almost a decade for them to come to a level of electrification, or even tier 6, they say they may take 5-7 years. For example, Brazil is today at tier 5, we are at tier 6. So we are even 1 step ahead of Brazil. So it is a cost of the product and the availability of fuel and the entire environment will change. So I would not like to speak too much on this because I am not an OEM nor very closely associated. But I see that somewhere in the world these products will be needed, and India is a logical choice for manufacturing.
Just 2 follow-ups on this. So if one were to just get a perspective on the opportunity scale, is it in multiples of the current, say, FY20 or FY19 diesel market in India? I mean, any perspective. And second is, are we seeing an acceleration even from the European players, because there also the market is also quite shrinking rapidly for diesel, but they would have a requirement to cater to the market, especially in the aftermarket for next 5, 7, 10 years or so.
See, the European players are mostly higher-end players and luxury players, so their strategy will be different. But some of the European players cater they make products starting from $10,000 also. So we have to look at their product, where they're selling, in which market they're catering to, other than China, of course, and where is the manufacturing base currently which is there, and is there any opportunity for going forward? We see a lot of opportunity there.
Okay, fine. Thank you and good luck.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Srinivasan Ravi for closing comments.
Thank you very much for being with us today, and hopefully we will meet again next quarter with for better results. Thank you very much.
Thank you. On behalf of Craftsman Automation Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.